Welcome back to the Sovereign Ratio. Right off the bat, before today's video, I'm going to give a big shout out to everybody and say thank you very much. I really appreciate your subscribes. We just passed 300, currently sitting at 303. And here's some examples of the fine community that we're building here. Big shout out to probably my most active member, Johnny JJ8633. Big shout out to JB-Li2TV for liking my video and sending it to 3 friends. Shout out to subscriber number 104, James Bond-IC6QX. Also shout out to the most recent comment on my channel from Nissi Lovbeld. My goodness, how impressive. Thank you, I appreciate it. And finally, shout out to Nate Mead. Man, just saw this today. I'm subscribed for all. Looks pretty cool, have to check it out. Let's keep going, push this thing to 1,000 and beyond. Today's been a very volatile day in the crypto market with some fake news coming out about a spot Bitcoin ETF approval that actually didn't happen. But in the meantime, what I want to do is give everybody 5 indicators that I use on a daily basis. If you're new here, please hit the subscribe button, the like button, and leave me a comment below. So let's get the easy one out of the way real quick. If you've seen any of my videos, you'll know that my absolute favorite indicator is the Stochastic RSI. Specifically the ultimate stochastic RSI, which I will show the difference between the regular and the ultimate. So the ultimate stochastic RSI is similar in design to the regular RSI with a couple of key differences. One, the ultimate stochastic does show green and red bars for overbought and oversold areas, and it is a little bit slower moving. Whereas looking at the regular stochastic RSI, if one were to trade based off of the K line crossing above the D line or below the D line, the blue moving line being the K line, the orange line being the D line. Typically, whenever the K crosses the D, the direction price-wise goes the same way. So like here, if the K had crossed the D, we would expect price to go up, which it did. If K crosses D downside, we expect downside, which there was a little bit of that. The problem is that you get into a situation where there's too many trades available because cross. The regular stochastic is just very fast moving and crisscrosses all the time. The ultimate stochastic is what's called smoothed. So the smoothing basically takes away all of that most of the little volatility within the stochastic RSI and makes it a much better trading tool so that whenever the ultimate stochastic is in the top, it's definitely higher likelihood to be a sell point, and if it's at the bottom, it's definitely higher likelihood to be a buy point. Now, there are times, like down here, right after the FTX dump, where there were several drives of bullish divergence on the RSI, or the stochastic RSI. So buying here would not have got you to the bottom, but it would have gotten you pretty close because that was the 786 retracement from the bull market right here around 17 to 18K. So you would have missed out on a little bit here, but for the most part, using that is a pretty good indicator of maybe something to be interested in, right? So the RSI is on the bottom, I'm kind of interested in buying. The RSIs at the top, I'm kind of interested in selling. That's why I much prefer this version of it, is because it removes all of this crazy volatility out of the RSI. When we take that back out, we have a nice tool that also has a histogram in the middle to help identify changes in trend between a red line and a green line. My second favorite indicator is the RSI Divergence indicator, which is an enhanced version of the regular RSI. And it does need to be adjusted to look like the standard RSI, but also provide the bullish, hidden bullish, bearish, and hidden bearish labels. The RSI Divergence indicator is a little bit interesting in that it needs to be configured after you add it to your TradingView. So I will go ahead and double click on this and show the settings that I use, which is an RSI period of 14, closed RSI source, and then 3, 1, 75, 60, and 5. For the remaining fields, and then I have everything plotted as far as hidden bullish, hidden bearish, and so on and so forth. Essentially what this does is makes this indicator the same as the regular RSI, except plotted with bullish and bearish divergences to the extent that the indicator will allow that to happen, which doesn't seem to be as much as my eye would, but it is nice to see those labels and those lines connecting the points where that divergence was identified. If you're completely new to the RSI indicator, I would recommend going back to the beginning of my playlist and finding the video that I did exclusively on the RSI. The production quality is not quite what it is today, but the information is still good. I will go ahead and just give a brief synopsis here. The RSI stands for the Relative Strength Index, and essentially it's similar to the Stochastic RSI, but it's slower moving, and it tends to identify bigger movements overall in the big scheme of things, if you're using it on the right time frame, of course. And one of the key features of this is called a divergence. A divergence is when you'll see a difference in price that does not match the difference in this indicator. So for instance, you can make the claim that because we have a peak here and a peak here, with the second peak being higher, and then we have a peak on the RSI, with the corresponding peak in price being lower, those are going two different directions. So it's a divergence. This particular one, because we have a higher price and a lower RSI, would indicate bearish price action or a move down, which we actually did see right after that. My third favorite indicator is the BBWP, which stands for Bollinger Band with Percentile, and it's used to measure volatility within the crypto market. The BBWP indicator is essentially direction neutral. What it measures is how much volatility is in the market. The indicator itself going up does not indicate price is going up, it indicates that volatility is going up. And since volatility is direction neutral, we have to go to other indicators to figure out a plan of what we think is going to happen with the BBWP. That being said, what's the best indicator for that? Well, from what I've been able to find, it's really the stochastic oscillator. So the direction that the stochastic oscillator is poised to, at the time the BBWP crosses up around the 10 to 15% mark, which is indicated right here on the right side. You can see there's a wealth of percentage gaps here at roughly 4% each gap. When this blue or this multicolored line, which is the BBWP, crosses up the white signal line around the 10 to 15% area, that's generally when we see big expansions in volatility and corresponding price movements as well. So like this particular one here, the last time we had a big expansion on the BBWP was right here, and we saw volatility to the downside. In this particular instance, I would say this one was a little bit difficult to identify because the movement was so fast. But if we see when the BBWP did expand, the stochastic oscillator was pointed to the downside. See what the Bollinger Band with Percentile actually measures? All we have to do is add the Bollinger Bands to the chart. You can see that when the Bollinger Bands are very contracted, BBWP is generally very close toward the bottom of the range. And when the Bollinger Bands are very wide, that means there's been some expansion. So here, this is where the period of expansion occurred from here, where there was a relatively small gap between the lines of the Bollinger Bands. And then when it expanded, you can see that the Bollinger Bands got very wide. And that corresponds with this expansion right here. My fourth favorite tool is a Fibonacci retracement and or reverse Fibonacci retracement with an addition for the golden pocket tool between the 618 and the 65. Fibonacci is one of the most useful tools to me in TradingView, and it's also one of the reasons that I created this channel. The sovereign ratio is the 1.618, and the Fibonacci is the representation of that. Now, this particular Fibonacci tool is, in my opinion, really good at identifying points of interest with some other tools that are not in this particular video that I will talk about in future videos, such as the FRVP. However, here, what we can see is the Fibonacci tool actually identified where the landing point was going to be for the bottom of this bear market pretty well. It was right at the 786, and then that FTX collapse kind of took it a little bit below that. Because I don't think that was one of those events that were planned where people were like, I'm just going to push the price down to 15K. I think the original plan for most people was to buy here at the 786, which is around 18K, and then the FTX debacle did push price down a little bit further. Also, I mentioned just a second ago that the 618 to the 65 is called the golden pocket. And this is actually a configurable tool. So if we double click on it, there's a lot of options here. You can change the color for each level. You can add in new levels if you want to. The only thing that I've done here is made these two lines gold. I added in the 0.65 because the 0.618 together with the 0.65 is called the golden pocket. And that generally is a very good point of interest and a decent place to look for trades. I removed that particular Fibonacci that I had just to demonstrate how to use it. So it's right here. It's a standard part of TradingView. We click on that and we can either go from swing high to swing low or from swing low to swing high. In this instance, what I'm going to do is I'm going to do a swing low, swing high, which basically represents the entire last bull run. And you can see that the 786 at 17.7 here corresponds very well with what we just talked about. And the golden pocket is actually where we're sitting right now. You can also do this the other direction. If you're looking to predict where the market could go, you can also go swing high to swing low. And then good targets to look at are the 1618 and the 2618. So in this particular instance, the next bull market, if that was the Bitcoin bottom, an area of interest is $102,000. Another area of interest is $155,000, which is personally where I think the next bull run will end up, is around the 150K area. And last but absolutely not least, my fifth favorite indicator is the Gaussian Channel. How the Gaussian Channel is calculated and what it represents is actually something that I do not know everything about, but functionally I know how to use the Gaussian Channel for trading. If we look at it historically, it's always been an extremely good point of reference for, let's say, the median line of the Gaussian Channel. Whenever Bitcoin has held that line, has been a good indicator that price is going to have a big movement up. Conversely, whenever it breaks the median, there's usually a big move down. So it's really that middle line that we're interested in predominantly to determine the entire macro direction of the market. But the top and the bottom also serve as good places to catch wicks and also serve as transitionary periods as well. So for example, here we held that median line right after the flu dump. We came into it, bounced around a little bit, and then when we broke the top of that Gaussian channel and bounced off of it, that's generally when big moves happen to the upside. And conversely, when it falls down and then retests the bottom of the Gaussian channel and goes below, that's when big moves down happen, especially from a macro perspective, as this is the weekly chart. If you watched any of my videos from the previous months, I was using the Gaussian channel extensively in my analysis, and this is one point where it didn't work. Here we had a break of the Gaussian channel, and I thought for sure that whenever this happened and we came back to retest the Gaussian channel along with the top of the bull market support band, that price was going to go between $37,000 and $47,000. That was my target based off of Fibonacci and other tools, and it just didn't happen. Bitcoin fell right back into the Gaussian channel, fell down to the median line, and it's just been ping-ponging around ever since. Even with today's volatility from the false spot Bitcoin narrative, spot ETF narrative, this giant wick pushed price right back into the weekly Gaussian channel. And the weekly Gaussian channel is, as I said, a very powerful tool when used in conjunction with other common sense and TradingView and other indicators that we've discussed in this video. The color of the bar change represents really the direction of the market, but it is somewhat of a lagging indicator. So really going off of the color for me isn't something that I like to do, though I could see some instances where it could be useful, particularly on shorter time frames. So if we throw all these together, we get this very complicated screen that we're looking at right here, which is what I look at on a daily basis. Doesn't necessarily mean that you have to be a successful trader using all of these things. You might be a successful trader with one indicator. I don't know, it's a personal journey, but regardless of what you use, thank you for coming out and watching the video today. I hope you learned something. Please hit the comment, or please hit the like button, leave me a comment, and hit the subscribe button on the way out. And once again, a big thank you for hitting 300 subscribers. Safe trading. We'll see you in the next video.